All right, today we're diving into the story of a total outsider, a quiet chemist who looked at the madness of Wall Street and, well, he saw something completely different. This is the story of T. Rowe Price and how he basically invented a revolutionary idea, growth investing. So, this really brings us to the core question, the one that frames this whole story. What on earth can a chemist teach Wall Street? I mean, it sounds like the start of a bad joke, right? But the answer? Well, the answer is the foundation of one of the most successful investment philosophies ever created. So, who was this guy, this unlikely investor? Yeah, you gotta forget that stereotype of the loud, brash Wall Street trader. Thomas Rowe Price Jr. was the complete opposite. He was a methodical, almost quiet thinker from Baltimore, and his mind was shaped not by frantic trading floors, but by the quiet precision of a science lab. And this was true from a really young age. Price had these two defining traits, a deep scientific curiosity and, just an unusual level of discipline. He wasn't the kind of guy to get swayed by what was popular or the promise of a quick buck. No, he was driven by this need to understand how things really worked, the fundamentals. And that disciplined curiosity, it would turn out to be his greatest weapon. And you can see this in the path he took, which was totally different from his Wall Street peers. He was brilliant at analytical subjects, sure, but he chose to study chemistry. He worked in labs, in chemical companies. And look, this wasn't some random detour. This was his real education. He was learning how actual businesses create actual value from the inside out long before he even glanced at a stock ticker. Okay, so now let's paint a picture of the world that Price was about to walk into. We're talking about the Roaring '20s, and it wasn't just about jazz music and flappers, right? In the world of finance, it was basically a massive high-stakes casino, and the whole thing was fueled by pure speculation. The whole atmosphere was intoxicating. It really felt like this unstoppable machine for making money. But here's the crucial part. The soaring stock market was often completely, and I mean completely detached from how the companies were actually doing. It was like a hot air balloon that had cut its rope and was just floating away from reality. And this slide, it just lays out the conflict perfectly. On one side, you have the 1920s market, which was all about momentum and hype. The strategy was short-term gambling, really, all based on this crazy belief that the party could never end. And then you have Thomas Rowe Price. His view was the polar opposite. He was focused on fundamentals, on reality. His strategy, long-term ownership. And his belief was that there was incredible danger lurking in companies with weak fundamentals. He wasn't just being a contrarian, he was literally playing a different game altogether. So the big question is, how does a chemist even survive, let alone thrive in a speculator's casino like that? Well, that scientific training, it became his secret weapon. It gave him this unique lens to see the market not as a game of roulette, but as a complex system just waiting to be analyzed. Let's break down how this actually worked. First, methodical research. Just like a scientist poring over data, he would do these incredibly deep dives on companies. Second, long-term observation. He knew that real trends, just like a good experiment, they take time to play out. And third, and this is so important, was his empirical grounding. If an idea wasn't based on verifiable facts, on real data, he just threw it out. He was, in essence, bringing the scientific method to Wall Street. Every great theory eventually has to face a great test. And for T. Rowe Price, that test was about to be one of the biggest financial disasters in human history, the Great Depression. This was it. This was the moment his whole counterintuitive philosophy would either be proven brilliantly right or just get completely wiped out. And this timeline really tells the whole dramatic story. You've got the late 20s with all this market euphoria and wild speculation. But as that party hit its peak, Price's analytical mind started seeing the cracks, the things everyone else was deliberately ignoring. And then, bam, October 1929. The stock market doesn't just crash, it vaporizes. Fortunes are wiped out, and the whole global economy goes into a nosedive. And this is where his background really shines through. While everyone else was panicking, watching their life savings disappear, Price's reaction was, well, it was one of almost clinical detachment. To him, the crash wasn't just some personal tragedy. It was the ultimate data set. It was a massive real-world experiment that he could now study and analyze. So, what did he actually learn from sifting through all that wreckage? He basically boiled it down to a few core truths. 1.
Markets are doomed to fail when investors start chasing illusions instead of reality. 2. True investing isn't about speed. It's about patience and deep, hard research. And 3. The only real safe havens are businesses with strong, legitimate, long-term growth. These lessons, they became the absolute pillars of his entire philosophy.
Okay, so having survived the crash, with his ideas pretty much proven correct, Price didn't just pat himself on the back and go back to the old way of doing things. No way. He looked around and realized the entire system was fundamentally broken, and he decided he had to be the one to build something new. He looked at the industry around him and he got more and more frustrated with what he saw. He called it the commission engine. Brokerage firms made money by getting clients to trade. A lot. They were incentivized to just churn accounts, pushing people into speculative bets to generate fees, not to actually build their wealth for the long term. And to him, this was a massive ethical failure, one he just couldn't be a part of. So out of the ashes of that crash, he formalized his whole philosophy. He called it growth investing. The idea itself is beautiful in its simplicity, but it was radical for the time. It was, forget the day-to-day market noise. Instead, use disciplined scientific research to find truly well-managed companies in industries that are actually growing. And then, and this is the hard part, have the patience to hold on to them for the long haul, focusing on their real earnings growth, not the crazy speculative whims of the crowd. And honestly, this one quote from him just captures the whole thing perfectly. Study companies as if you were owning them for life. That right there is a fundamental shift in mindset. It's saying you're not just renting a stock for a few weeks or months. You're becoming an owner in a business. And that simple idea, it completely transforms investing from a short-term gamble into a true long-term partnership. So by 1937, with this philosophy completely crystallized, his mission was clear. He took that huge leap and founded his own firm. And this wasn't just another investment shop on the street. No, it was the living, breathing embodiment of his life's work. A firm built from the ground up on research, on discipline, and on creating real, long-term partnerships with clients. And that brings us right back to today, doesn't it? I mean, we live in this world of 24/7 news cycles, meme stocks, and you can trade instantly from your phone. In this kind of environment, Price's core idea, patience, it almost seems radical, almost old-fashioned. So we want to leave you with this question to chew on. In an era that is completely obsessed with speed, could it be that the simple, disciplined act of being patient is the ultimate, and maybe the most overlooked, competitive advantage there is? Okay, picture this. A world where the stock market isn't about smart investing. It's just a giant, chaotic casino, a place totally run on fear and wild rumors. I mean, that's pretty much what it was like back in the 1930s. And then, one guy comes along and dares to say, hey, what if we play this game a completely different way? And by doing that, he basically changed finance forever. And that's really the heart of it, isn't it? The story of T. Rowe Price. It's not just about making money. It's about how one single, powerful idea, an idea built on pure discipline, can just slice right through all that chaos and fear and completely reshape an entire industry. All right, so let's really set the scene here. We're in 1937. The Great Depression, that's not some distant memory. It is still a fresh, raw wound. Nobody trusts the financial system. I mean, it's completely shattered. And the market that's left behind, it's basically running on just two things: pure, gut-wrenching fear and totally reckless gambling. Yeah, you gotta understand. People weren't really investing. They were gambling, plain and simple. They'd chase any hot tip, any rumor, just desperately hoping to hit the jackpot. And what happened most of the time? They lost everything. This was a market ruled completely by emotion. Logic had just left the building. And this contrast right here, this is everything. You've got two completely different worlds. On one side, you have the total chaos of the market, that tornado of rumors and trading frenzies. But on the other side, you have the core of T. Rowe Price's vision. It's quiet, it's disciplined. It's all about focusing on what really matters, the actual health of the business itself. He was about to bet his entire career on that second column. So this is where our main character enters the story, Thomas Rowe Price Jr. In 1937, he does something pretty bold. He just walks away from his job at a traditional brokerage firm to start something brand new. A company that wasn't going to be built on all that speculation, but on a philosophy that was frankly revolutionary. And these right here, these were his core rules. Now, you might look at this list and think, yeah, that's just common sense. But you have to remember, back then, this was radical. He wanted to invest in companies with strong, sustainable growth, like planting a tree and watching it grow. He cared about who was running the company. He wanted to hold on for the long haul and just ignore all the fads and market noise. He wasn't asking, hey, what's hot right now? He was asking a much deeper question. What's a truly great business that's going to be even better down the road?
And eventually, this whole philosophy got a name: growth investing. The key thing to get here is how it completely changed the goal. It stopped being about trying to guess where a stock price is going to go next week or next month. Instead, it was all about finding really strong companies and then just having the patience to let their success build your wealth over years, maybe even decades.
Now, Price was smart. He knew a great idea is pretty much worthless if you can't actually execute it. So he built his entire firm around this culture of discipline, of doing deep, careful research. The whole system was basically designed to fight against all the drama and emotion of the market.
And this is how he made that idea of discipline a real, tangible thing. His analysts weren't just sitting in an office staring at stock tickers all day. No way. They were out there, on the ground. They were visiting the factories, talking to the management teams, really getting to know them, and trying to understand the business from the inside out. It was about real-world stuff, not just numbers on a screen.
This quote from Price himself really gets to the heart of it. He understood something deeply psychological. The biggest threat to you as an investor, it isn't a bad market, it's you. It's our own human nature to panic when things get scary, to just follow the crowd, to get greedy and chase a quick buck. His entire system was basically a defense mechanism against our own worst instincts. So, for 13 years, Price and his firm just quietly did their thing, perfecting this method. But then came 1950, and it was time to put it all to the test, to put it all on the line. He decided to launch a mutual fund that would take this philosophy out of his private office and put it directly into the hands of everyday people. Yep, 1950. That was the big turning point. The T. Rowe Price Growth Stock Fund launched, and it was one of the very first of its kind. I mean, a mutual fund built entirely around this newfangled idea of long-term growth? People were skeptical, for sure. The critics were lining up, but Price was ready to show them it worked. And he did. Over the years, the results just became undeniable. While most of the competitors were constantly jumping in and out of hot stocks, Price's patient, research-first approach just delivered better performance, consistently. And that success didn't just make his clients a lot of money, it proved that his entire strategy was legitimate. And that performance really cemented his legacy. Thomas Rowe Price Jr. wasn't just another successful fund manager anymore. He became known as the father of growth investing. He established these core ideas that, honestly, are still incredibly influential today. So, when you boil it all down, what can we take away from this pioneer? Well, first, focus on the business, not the stock's daily zigzags. Second, always choose patience over panic. And third, base every single decision on solid research, not on some silly rumor you heard. Those three pillars right there, that's his legacy. And that kind of leaves us with one final big question, doesn't it? When you think about our world today, with instant news, high-speed trading, just 24/7 noise, you have to wonder, is T. Rowe Price's quiet, patient, business-first philosophy actually more radical now than it was all the way back in 1937? Something to think about. Okay, let's just forget about all the noise on Wall Street for a second. The flashy headlines, the crazy traits. What if I told you that the most powerful force in finance wasn't a single stock pick, but a single idea? That's exactly what we're diving into today, the incredible, lasting philosophy of Thomas Rowe Price Jr.
I mean, you know the name, right? T. Rowe Price. You've seen it everywhere, on funds, all over the financial news. Heck, it might even be sitting right there in your retirement account. The company is an absolute titan in the investment world.
But here's the thing. Behind that big, familiar name is a philosophy, a set of principles that were, and I'm not exaggerating, completely revolutionary at the time. It was a way of looking at the market that flew in the face of what pretty much everyone else was doing. And the crazy part? It's probably more relevant today than ever before. So that's what we're going to do. We're going to peel back the logo and look under the hood. To really get what makes this company tick, you have to understand the core philosophy, the actual DNA that Price himself built from the ground up. This is the stuff that went on to shape how people invest, even today. All right, so what was his secret sauce? How did he do it? Well, it really all comes down to four key ideas, four foundational pillars. And these weren't just, some friendly suggestions. Nope. These were strict, guiding principles for every single investment decision. And here they are. First, a long-term perspective. Second, decisions driven by serious, deep research. Third, a solid commitment to ethical investing. And fourth, just completely rejecting speculation. You put all those together and you've got the blueprint for what we now call growth investing. So let's dig into each one. Okay, pillar number one, the long-term view. You got to remember, back then, Wall Street was obsessed with the day-to-day. The stock ticker was king. So Price's idea was, well, it was totally radical. He basically said, stop trying to outsmart the market every single day. He argued that real, lasting wealth is built by finding amazing companies and then just giving them time to grow. We're talking decades, not months. Pillar two is all about research, and I mean deep, almost obsessive research. We're not talking about just glancing at an annual report. No way. Price made his analysts get out of the office. He wanted them walking factory floors, meeting management face-to-face, and truly understanding a business from the inside out. It was all about knowing what you own, right down to the nuts and bolts. Now, for the third pillar. And this is what I find so fascinating. It feels so incredibly modern. For Price, integrity wasn't just some fluffy, nice-to-have concept. It was a non-negotiable. He believed it was an absolutely essential ingredient for sustainable success. He saw this direct, unbreakable link between strong ethics and strong returns. And finally, the fourth pillar, sheer discipline to avoid speculation. Price looked at all the market fads and manias, and he saw them for what they were, a casino. He was constantly warning people against chasing the hot new thing or trying to predict the market's wild swings. He knew that was just gambling, not investing. The focus had to be on the real business, not all the noise. And this just lays it out perfectly, doesn't it? On one side, you have Price's discipline. It's like planting an oak tree. It's about long-term focus, deep research, understanding the fundamentals. On the other side, you've got market speculation. That's the slot machine, all about short-term gains, chasing fads, and trying to time the untimable. Price? He chose the oak tree every single time. So, okay, it's one thing to have these powerful ideas, but how do you make them last beyond your own lifetime? How do you make them stick? Price's answer was simple, but so profound. Mentorship. See, he didn't just write a book of rules and call it a day. He rolled up his sleeves and personally embedded these ideas into a whole new generation of investors. He taught them to ignore the market's daily tantrums and focus only on what they could actually control, the quality of their research and the depth of their patience. He really was a voice of reason in a world that was getting more and more speculative. And this quote, man, this really gets to the very heart of his mission. Price wasn't just playing for short-term wins. He was building something bigger, a system, a culture, a whole philosophy that could outlast him and guide others for decades to come. That was his definition of true impact. So you might be thinking, okay, that's great history, but what does a philosophy from the mid-20th century have to do with us today? Well, here's the kicker. Price's ideas aren't some dusty relic on a shelf. They are, quite literally, the bedrock of modern finance. You can kind of see how it all unfolded. The seeds were planted back in the early 70s, when he started really baking his philosophy into the firm's culture. He spent that decade mentoring the next generation, spreading his principles. So, by the time of his death in 1983, his ideas were fully institutionalized. And now, today, the approach he pioneered, growth investing, is a dominant strategy all across the globe. The evidence of his legacy is just everywhere. The term growth investing is now a staple of our financial language. You have fund managers all over the world using his painstaking methods of deep research and long-term patience. And the name T. Rowe Price itself has become a byword for discipline and integrity.
So, if we boil this all down, what did Price really teach us? First, that investing is a discipline, not a trip to Vegas. Second, that patience is one of your most powerful assets. Third, that integrity and deep knowledge are what pay the best dividends. And finally, that one powerful, principled vision can genuinely change an entire industry for the better.
And that leaves us with a final question to chew on. In our hyper-caffeinated modern world, with 24/7 financial news, crypto fads, and meme stocks, is a patient, disciplined philosophy like the one Thomas Rowe Price Jr. built the single most valuable asset an investor can possibly have?